Half an hour away from the Open in Hong Kong, you're watching the China Show. I'm Yvonne Man with David Ingles.
Good morning and happy Friday. Our top stories today: stocks across the region edging higher as optimism continues around AI, propelling global equities to fresh records.
That AI frenzy continuing to supercharge Alibaba shares. Fund managers expect the $250 billion rally to go further this year.
Also ahead here in shows, crunch time for Japan's ruling party with its leadership vote, a last chance to avoid drifting further into political peril.
Plus, China defends its new visa program for global talent after citizens express worries about losing jobs to foreigners.
Good morning. Happy Friday. Welcome to the show. The story continues to be one where AI is really front and center. When you look at Japan, for example, yes, we can talk about the elections on the weekend. We're up a fifth day every single day, of course, this week. On the regional benchmark, we're looking at Taiwan, and of course, that is coming online. Korea is close, by the way, today. Just keep that in mind. As with mainland China, features are coming online, of course, in Singapore on A50. So do expect, at least for the most part in Hong Kong, for volumes to remain on the lighter side of things. 0.4% today upside on TSMC. Within the Japanese space, flip the page, please. We're looking at some of the chip plays very much in focus there as well. This hour, speaking of Japan also, is you have the BOJ governor set to speak. We'll see what happens with that. Really on the back of weakness yesterday in the JGB space, and of course that auction that didn't go too well on the 10-year yield. We are trading near the low end, by the way, on the range on dollar-yen. Conversations around Fed and the BOJ, right? So Fed, it looks like they'll be cutting. We're almost fully priced for October. We're not nearly there as far as BOJ hikes are concerned. Flip the page, please. But I think we're looking at about 64, 65% probability. When you look at swaps currently, that's a changing target, of course. Now, within the commodity space, of course, Brent, we're seeing a little bit of upside there. But when you look at the range the last 5 months, it's very near the bottom end of that range. Pick up here, 120,000, and that's really the correlation between that and the AI play in chips and the Philly Semiconductor Index. So we're looking at, of course, a lot of the crypto-related stocks across the region on the back of this return back to 120,000. And yes, we'll be going really deep into copper this hour with JPMorgan and really their calls of how we could get to 11,000, how to play that in the equity markets. And of course, overnight, the story continues here, and we'll unpack the Alibaba story for you and how fund managers do see this unrelenting rally, which continued, as you can see overnight, really has room to run even further. So, suffice to say, Alibaba is going to be front and center again today for us.
Yeah, sell side still catching up. And you compare the valuations, it's certainly not looking that demanding if you compare it to other parts of U.S. tech here right now, right? So that is part of your agenda here today, the Alibaba, the Baidus of this whole AI trade. Certainly we're watching sectors like the semis, given what we're seeing already in the Japanese chip stocks that are basically lifting the topics there here this morning. Copper is also, as we talk about with Matty, Zhao, as well. Crypto is certainly in focus after we did briefly touch that 120,000 level for Bitcoin as well. The stock rally in Hong Kong still continues, as we say, given what we've been seeing and all that. Low volumes in Hong Kong, though, that's something that we do need to contend with here today, given that we're still very much in the thick of the Golden Week holiday. So we're still expecting some data coming through there. We're so far getting a little bit about the box office numbers, and 2025 looks to already surpass what we saw last year, according to CCTV. So, yeah, they're heading to the movies, Dave.
Yeah. On the volume side of things, as Yvonne is pointing out, as we look at this next sort of potential milestone and price on the Hang Seng China Index, that's really what you get when a lot of the volumes are via the Stock Connect, and obviously mainland China is closed. I think we were very, very light on volumes yesterday. So as things stand, as of yesterday, 10,000 points is the next one to watch on Hang Seng China. We're within about 3% of that level. We topped that. That takes us back above that level, I think, for the first time in about 4 years. Or so. Yeah, but likely not happening today, as you can see looking at futures, bottom of your screens. Let's bring in Mark Cranfield. He's in Singapore for us to help us understand the trading session ahead. Mark, I think one thing to notice, we're likely not going to get the jobs report later today, likely going to be delayed. Is it a big issue when you look at it from a macro trader's perspective?
Not when you have an AI-driven rally, as you've been talking about this morning. So let's throw two more names in there as well. You talk about Alibaba, that's very important, particularly from an Asian point of view. But two others, names that people are talking about and are very significant, OpenAI and SoftBank. So the report we had that came through yesterday, that OpenAI's valuation has risen to 500 billion. We've already had a lot of excitement about AI in general, but now we're starting to see some serious numbers applied to that market. Well, when you get a valuation like that, it's a boost for everybody. So obviously that feeds back into optimism on Alibaba, but also very significantly for Japan into SoftBank as well. We're seeing another very good start to the day there. And Bloomberg Intelligence has a very good report out this morning showing how the SoftBank portfolio is now really coming back. For sometimes it was a concern to investors that some of their long-term investments weren't looking that great. That has all changed this year. Things are looking a lot better, and the AI investments are a big part of that story as well. So we really got to, it's almost like feeding on itself. It's a positive cycle. One thing leads into another, and it's very difficult for people to be concerned about economic numbers or the lack of when you have such a fundamental story as this driving all sectors of the market.
Yeah, forget a U.S. shutdown, forget even just overall all these concerns about valuations and the like here right now, Mark. It brings to light what to look forward to. I mean, you've been focusing a lot on dollar yen. Japan, obviously, we have a leadership sort of race this weekend as well. We're also expecting to hear from the governor of the BOJ, Widya. What are you looking out for in terms of what are going to be the next guideposts for dollar yen?
It looks as though everything is teed up for the Bank of Japan to be able to raise the interest rates, which they've been trying to do for some time. They've been looking for the window. It looks as though the LDP leadership race is now falling into position for them. So investors are assuming that Koizumi and Takaishi will be the two front runners. They may need to go to a runoff. They're not expecting a big surprise from that point of view. Sensibly, both of those candidates have been leaving monetary policy to the Bank of Japan, so that helps Ueda as well. The Tankan report came into place just as he really needed it to. Other members of the Bank of Japan have been supporting his view that it's about time for the central bank to get on with raising interest rates again. So everything is coming into play. The yen is showing a little bit of strength here, but nobody is really expecting this to be a cycle where the Bank of Japan raise rates and continue to do so rapidly thereafter. It's probably going to be a rate increase and quite a long gap. If you look at the track record under Ueda, usually it's several months before they're able to do it again. So that means we'll probably see modest appreciation for the yen. That will help equity market. They don't need to be too concerned as they were in the middle of last year when there was intervention and a rate hike at the same time. We're not going to get that kind of a mess in the Japanese equity market. So they can refocus on the themes which are driving there. Japan's on a reasonable footing economically. Interest rates, that even if they raise to 0.75, by global standards, that's still very low anyway. So we're probably going to get more of the same. Continuation, politics, a bit of a sideshow for investors, but AI themes, a stable and relatively weak yen, all in general helping to support the Japanese cause. And people, the JGB yields at the very long end of the curve look as though they've peaked out. The Bank of Japan is also doing its part. It's making sure that where it's trimming purchases, that's at the short end. That's not really affecting the 30, 40-year sector. So overall, everything has a pretty decent background to continue to do well for Japanese assets.
Mark, thank you. Mark Cranfield there, MI strategist, wrapping up the week for us here on what has been a very, very strong one in terms of tech momentum. Let's continue with that here as well. We're seeing that in some of these Japanese chip makers here this morning, but really globally, you've seen when it comes to semiconductors, have seen their market value soar as investors rush to get exposure to AI. Now, this rally has added, get this, $200 billion in just one session alone to the combined market cap of the Philly Stock Index Semiconductor Index, which is a gauge that tracks Asian chip stocks as well. Certainly what you're seeing is continued upside. Let's bring in Charlotte Yang. She's with us right now. How long can this run kind of continue?
Yeah, so far looks like no signs of baiting. You're seeing the AI trade continues to power on for the chip makers, and you're seeing investors from Seoul to New York, piling into the sector. Looks like every AI headline is able to spark a wave of euphoria. With OpenAI's 500 billion valuations, and also their partnership with the Korean chip makers, and the staggering number you just mentioned that we're seeing more than 200 billion added in the latest session alone. I mean, there are some concerns with valuations. instance, one would point to the Philadelphia Semiconductor Index that's now trading at 27 times. That's already near the high of 2024, and also 19 times for Asia gauge. But and there's also that question with all these spending on data center infrastructure, but so far the AI services have not become mainstream, and there's no commercialization, that kind of monetization aspect yet. But so far for trading wise, seems like there's still of that fear of missing out dominating the same. So sentiment will continue, but so long as and until we have the next earnings test to have some sort of reality check, looks like so far the momentum is still very strong.
Yeah, and I think investors are now, well, they're certainly buying the theme, they're buying the play, they're buying the index. But within the index, there are some valuation sort of discrepancies in place. And the reason I bring that up is Alibaba has now emerged as certainly a very real play on this because of also the discount it's trading at compared to its peers.
Yeah, so for years, I think nobody was so interested in Alibaba's cheap valuation, given it's always cheap, right? But now, given how it's the whole conversation with Alibaba I've been having with people has completely changed. 3 months ago, you're talking about delivery competitions, e-commerce market share losing. Now it's all about AI and how it's a full stack AI investment, so uniquely positioned in China. So the rally has gone very hot, more than double this year. But the bull investors are looking at a few points. So you have the positioning-wise, while onshore investors love Alibaba, southbound holding has reached 11%. International investors, as of end August data, they're still underweighting Alibaba, about 1.5 percentage points versus MSCI China weight. And that shows the potential of dry powder coming. And valuation-wise, it has sharply re-rated over the past months. But 22 times, it's not that outrageous when you compare it to U.S. peers. And also even Hang Seng Index is on par, and it's also below Alibaba's own peak of 29 times. And as U.S. tech giants, they keep hitting fresh highs, Alibaba is still more than 60% below its own record. And Tencent also approaching its own record high soon. So I think with that, there's a lot of data points that kind of give investors that conviction that there's more to run. And not to mention that, in China, there isn't that many tech giants that has the infrastructure, the will to spend, and the ambition to lead in AI.
Yeah, investors are starting to, in the very early phases of rediscovering Chinese tech, and now there's an AI component to that. Charlotte, thank you so much. Charlotte Yang there, our Asia Equities reporter. In fact, just on that note, let me just show you a very brief chart on this re-rating in shares of Alibaba. Can we get that up, guys, if we can, please? Let me just have a look at what that is here very briefly. If I could ask my producers to bring up. Thank you so much. Baba is now back. So we're up 200% on price from the bottom, but that's only been enough just to show you how undervalued shares were. 200% only takes you back to the average as far as this is concerned. So there's room to run. This is, I guess, to Charlotte's point, one more thing to note here.
Yeah, far from the peaks, as she says. So, is there that room for catch-up still here and get back to those glory days? That certainly is one thing for Alibaba. We're also watching what happens in Japan. So the BOJ Governor, Widya, is now speaking in Osaka in a meeting with business groups. So talking a little bit more about inflation. So he sees that price increases could last more than expected, and prolonged inflation could weigh on consumer spending. So it sounds a little bit hawkish here, but I'm taking a look at dollar-yen, and we are actually seeing some weakness here on the back of some of these comments, Dave. Yeah,
I mean, on the surface, that does look hawkish. You're correct. I'm just looking at my pricing now on my screens, whether that's affecting expectations around the BOJ. Of course, there is also the elections this weekend, which, by the way, yes, that is on the political side of things, but that's fairly split, and that could determine the path of interest rates as well when you look at how hedge funds are betting around that. Okay, BOJ meeting is on October 30 at the end of this month. We're looking at currently a 63% probability of that. But it does sound, of course, he is talking about the economic case to do so. Dollar-yen, though, going the opposite way as expected. JGB futures on your screens right now. A little bit of upside there. Plenty more ahead. This is the China Show.
Okay, it's a word now, Dave. October. I'm going to make it cool.
What? October.
No. Our very own Anthony Stevens has been writing about this, right?
October.
October, not October, right?
Yeah.
Because of all this sort of AI frenzy and the like.
I like
so we're
that.
going to make October cool. We're watching, of course, those chip link names, of course, in Asia this morning after, of course, this whole AI rally extended on Wall Street. And this really following that Bloomberg scoop, right? We're talking about OpenAI, that valuation reaching $500 billion. Let's bring in our Asia tech correspondent, Annabelle Jewelers, on this crazy number that we're seeing when it comes to this deal.
It is a crazy number, and as Mark Cranfield was just saying, it's a number that really gives a boost to lots of different companies. I mean, it was a secondary sale within the company, so employees were allowed to sell their shares to investors or their stock, and yeah, at a valuation of $500 billion. At $500 billion, you're ahead of SpaceX, for instance. This is a valuation we've been mooting for Tether as well, we're hearing from sources, but certainly at this point, it seems like OpenAI could be the world's most valuable startup. And it's so crazy when you think about just a few weeks ago, we had that persistent concern being raised once again that the spending on AI, particularly in the US, was being overdone. The ROI wasn't there just yet. But again, it's managed to ignite or reignite that tech rally again. So the NASDAQ, for instance, you saw rising overnight, second straight record. But also in terms of what was really gaining in that, it was names like NVIDIA, Broadcom as well. It's the chip link names. And when you take a look at what's again moving in the session so far today, there are standouts so far in Taiwan today, and of course Taiwan is a very semi-heavy index, but still names like WeWin, for instance, they manufacture, they supply the servers and cloud infrastructure that rely on advanced chips. I mean, you can see that gain there of nearly 10%. You've got names like MediaTek, for instance, Alchip, they provide silicon designs and manufacturing services. So again, it's very broad-based. And you see the same story being repeated over in Tokyo this morning as well, with trading underway. Leaders like SUMCO, for instance, that manufactures silicon wafers for semiconductors. Tokyo Electron, we know, of course, is a major chip equipment manufacturer. Nitto Denko, chemicals that are used for semiconductor manufacturing. Rome as well, another chip-link name. So again, it's that semi story that continues to be very strong in the session so far today.
Belle, thank you so much. Annabelle Jewelers there on the latest on the AI frenzy taking place. Just make note, of course, Korea is close today, but you are seeing that expressed really in a very big way in Taiwan and also in Japan. We're also watching Tesla suppliers, speaking of Japan, in Japan today after the automaker slumped on Wall Street. This even after, of course, posting this record quarter of vehicle sales. Linda Liu is with us right now to help us understand why Tesla shares fell despite what seemingly were very good numbers.
Yeah, well, I guess investors realize that there's actually a lot of challenges that's going to be facing Tesla in the months coming ahead. Obviously, this bump in deliveries came because of the Trump administration pulling out this $7,500 in EV credit. So consumers, who's interested to buy an EV are rushing in, driving up the deliveries. But obviously going forward into the next quarter, that's not going to be around anymore.
Tell us about the company's challenges moving forward.
So not only is this EV tax credit, that's helping to drive so much of the sales not going to be around anymore, the Trump administration is also, considering cutting emission rules that have been so instrumental in helping EV makers like Tesla and others to sell their vehicles and being able to promote their offerings as more environmentally friendly. So if there's no rules like that in place anymore, a big driver for EV purchases for legacy automakers like GM and Ford to produce more EV models, that driver could be gone. And I think that's going to be casting a negative outlook for the wider industry.
And this disadvantage the company further as it competes with Chinese rivals, for example, like BYD.
Yeah, it'll be interesting to see how this competition plays out. Over here in China, the biggest EV seller, BYD, actually suffered a slight slump in its monthly deliveries for September. So BYD is also facing its own challenges in its domestic market, where it's taking on dozens of other brands, and the competition is only about to get more fierce. So Tesla, I think, and BYD and other Chinese rivals will be competing not only in China but in other markets such as Europe. And it's interesting because in Europe, BYD started to outsell Tesla for the first time. So we're going to continue to monitor to see how this rivalry is going to play out.
Linda, thank you. Linda Liu there joining us here on Tesla and the like, and this fierce EV competition in China as well. Your pre-market is looking like this. Hang Seng looks set to drop based on just price action. The early get-go here, we're down about 1/5 of 1%. We'll see how Alibaba does as well. Given this is what we've been talking about here, right? We're flat when it comes to
there's no trading in bonds today. But just in case you're curious, where they last traded, 187 is the yield.
From a few days ago. Plenty more ahead. This is Bloomberg. Some stocks to watch at the open, and it's BABA. Oh, there you go. Happy Friday.
Do you know what? Okay, here's the thing. Do you know what BABA means in Tagalog?
No.
Down.
Oh.
Which is interesting, right? Not that this is a play on linguistics, but yes, it's the opposite of what it means in Filipino.
I'm trying to think what it thinks in Chinese. It's just Baba.
Baba.
Like
Papa.
Like, like dad.
Need a papa.
There you go. Continue to see strength here. It's random talk on Fridays. Here
there's
you
no
go.
news, though.
There's no news. It's quiet. And, Alibaba, we continue to see it. It's just like this FOMO trade really around this stock here right now. Right? If you take a look at, how cheap or undemanding it is in terms of valuations compared to the likes of Nvidia, all these U.S. tech darlings. Certainly there is maybe some room for it to run. Baidu, though, perhaps maybe a bit of profit taking here today. We're watching some of these, Hong Kong style retailers, right? So we have the retail sales volume actually beat expectations, right? Not much movement when it comes to the likes of Chow Tai Fook and the rest here. But certainly that is a uplifting, or at least a more upbeat sort of print there when it comes to the retail side of things.
It was a good number.
No, it was.
3.2%. I know that doesn't sound like a lot. I know that's mid-single digits, but that's actually coming in, I think, well above estimates. And also within that, right, it's the reason why we're looking at jewelry. So the category of jewelry, watches, and clocks, up 14%. So if you're curious about, what's driving that. Sujin Gold, of course, it's a gold play, and of course, that went public this week. Plenty more ahead here. We're going to have a deeper dive into things like rare earths, copper, and gold coming up next. Good morning. Welcome back. You're watching The China Show. Equity markets are moving to the upside. The fifth day of gains on a benchmark basis. No mainland China yet today, so no stock connect, lower on volumes. I was told to mention that F1 is taking place in Singapore. Coming through. We don't have an F1 here in Hong Kong, although we might have a T1 later today. That's according to the Hong Kong Observatory, with the weather coming in. So a standby, I believe. So I think brace is the... Watch the weather forecast.
Okay, Singapore, you win.
Yeah.
This weekend, gosh. Can't beat that, right? F1.
No.
Over a T1.
Well, we have a better winter here, slightly. Right. Unless you walk into a mall in Singapore, then where it does feel like it's proper. You're in Finland in some cases, right?
All right. Why are we spewing all this nonsense, right? Because there's not much going on. But yes, we have to talk about markets overall, because it seems like when it comes to the tech sort of things, that is continuing for another day, right? This October, we're trying to make October cool. Yes, because of this whole AI buzz. So, I don't care. I guess the investors at least don't care about this U.S. government shutdown, delaying data, no jobs report likely on Friday in the U.S. We've kind of brushed that aside in some ways, but really we're focusing on things like, how did OpenAI get a valuation of $500 billion in this recent deal? That's enough to really trigger, once again, another rally. But there you go. HS Tech, though, at least today, for the broad stage, is actually lower. But, take a look at Alibaba, right? If you're talking about AI, this continues to be a FOMO trade. We're at $185 here, upside about 1% here. Baidu's heading the opposite direction, though, so we're down some 2% for both of those sort of tech darlings here. But we are seeing the rest of the tech space is quite quiet, right? Meituan, Xiaomi are flat. Tencent is slightly up this morning. So certainly that's going to be one thing to watch, right? How long can this whole AI trade continue, given the valuations when it comes to AI? As Dave mentioned, we're not quite even close to the peak, but we're even just approaching the mean, right? So, maybe there is some more upside to come for that stock in particular. MSCI China is slightly to the downside here, but keep in mind when it comes to Asian stocks broadly, it's been a good week, right? In fact, we're heading to a fourth straight week of gains in the last 5 on the optimism really around tech globally. Let's take a look when it comes to Cathay. There's been some analyst upgrades. This one from on Cathay here. This is from JPMorgan. So they're talking about cheap valuations. Take a look at the dividends. That's certainly one to watch here. But then again, look at that price target of 9.10 on your screens, right? Still lower than what the current level is. So despite this upgrade to neutral, they're still expecting possibly more decline on the shares as well. HK Steel. So watching some of these steel miners, the ones that are listed in Hong Kong from China. So there's been EU really proposing some tariffs that are really kind of mirroring what we saw in the U.S. when it comes to cheap imports from China, right? So they're talking about 50% tariffs for steel imports and the like. Not seeing a whole big movement when it comes to some of these steel miners here this morning, but we're tracking still gold, the copper plays, and Zijin Mining certainly is the big one to watch. And really what we've been seeing in Zijin Gold since this listing, right? It's been a bumper few days, certainly. But this is Zijin Mining shares, though. We have continued to see the shares go vertical, Dave.
8,000%. Not bad, actually.
Yeah.
Yeah, since 2003. Yeah, quite an upgrade. Quite an upgrade there. I mean, the reason that's also important, right? So we talk about this Zijin Gold story, the play on gold assets outside China. And of course, when you talk about Zijin Mining, people immediately think of gold, which is obviously one of the plays, but it is also a copper mine. And of course, when you look at copper, which has somewhat given us something to talk about again recently, copper's actually set for its best week in about 6 months, best year in 4 years, and the rally looks likely set to continue in copper prices when you look at some of the supply disruptions currently in the market. Let's get an outlook on copper, gold, and everything in between. Joining us here on set is Matty Zhao, BofA Global Research. She's their head of APAC Basic Materials Research. Matty, happy Friday. Good morning. Nice to see you. Can we start with copper?
Yes, of course.
Copper's okay. Okay. Markets looking at these operational disruptions in the 3 biggest mines. Yeah. How much of that do you think is already in the price? Because I know you guys are still bullish on copper prices.
Yeah, sure. So after the Grasberg's incidents, our global team actually upgraded copper further. We are now expecting copper prices to be 11,500 on average next year, and then further go to 13,000 in 2027 as well. That is because we will see probably the biggest deficit in the past next year. In the next year of nearly 400,000 ton of copper, because all these 3 mines are not going to resume normal production at least until mid to late next year. And of course, just now you talk about AI as well. Copper is a very important area in the AI and also powering AI. And then we are expecting the copper demand mainly driven by the grid, by the AI and also data center, and also by the transformer as well. And we are still expecting copper demand to grow at 2 to 3% next year. So we don't think the rally has already finished. We think it's probably just midway on that.
So you think this rally is not just supply driven and more on these disruptions? You actually do see a demand story there as well, longer term?
Okay. Actually, this year, copper and gold have been our top pick among our coverage. And for copper, I think this year, even before this accident, has been our top pick, mainly driven by our expectation of power grid investments. Power grid actually accounts for 40% of copper demands in China now. And then if you add up the transformer, the AIDC, that's totally around 50%. Of copper demand. And China copper demand has been growing at about 5% year to date as well. And China is more than half of the world.
What's the best equity play on copper and or gold?
Yeah, so the areas under our coverage is like Zijin Mining, the one that you just mentioned, China Moly, Shandong Gold on the gold side as well. And we are very positive on gold. We target gold prices to be 4,000 this year, but it's nearly there already.
Yeah.
When we target
Time to update that.
Yeah, when we target at the beginning of the year, we didn't expect that it will be achieved so fast.
Yeah.
Yeah.
What's driving that? Is it just? I mean, there's so many factors. Whether it's the Fed cutting, dollar weakness, central banks are still buying. What do you think are still going to be the key factors that are going to be driving that gold price higher?
I think in the next 12 months is probably the weak U.S. dollar, potential further rate cuts. It's from the macro perspective. Secondly is probably still the political risk on that as well. And I think the thirdly is also government and ETF buying. We actually continue to see China government buying for the central bank reserve. Currently, China's reserve of gold is only accounting for 6.5% of its total reserve. Global average is 18%. So you still have room to go. Not to say that insurance companies are also instructed by the government to buy, to use 1% of their assets to buy gold. That's actually equivalent to 5% of global gold demand if you're buying within 12 months. So you still have a lot of catalysts for gold.
That's a lot, 5%, yes. If it's only 1%.
Yeah. No, I mean if they buy it within 12 months, because they didn't give a timeline how long they can buy it.
Right.
But if they buy everything within a year, then it's 5%.
Okay, that's quite a big catalyst. Can I ask you about, not specifically about Sujin Gold, but it certainly opened up this window for a lot of
share sales
in the region. Should we expect more fundraising in the equity market on the back of this very successful one, I should note?
I think so. I think we continue to have a few companies that potentially looking for H share IPO as well for the gold and for the metal side as well. That is because probably the very strong gold prices as a big support as well. And then also with this success of Zhejiang mining and Hong Kong, China to attract more of a global money as well.
Can we talk a bit more about battery materials and the like? That's also part of your coverage here. You're expecting things to still remain quite tight. What are you foreseeing?
Yeah, sure. So we upgraded lithium around 2 months ago when CATL suspended its mines. And we have been seeing lithium supply and demand turning into deficit since 3 months ago as well. One of the key reasons is because demand has been very strong. We actually see battery demand in October going to go up another 10% month on month. And then also the power storage, the ESS. ESS year to date, I think installation in China is up more than 30%. Export is nearly doubling. So a lot of this very strong ESS demands, together with the EV battery demand, are pushing on the destocking for lithium as well. And even potentially with CATL coming back, we still see the lithium much tighter than before. I think the last point is, apart from CATL, the other 6 or 7 mines that are still potentially under the government check, they're supposed to submit document end of September. And then if they don't meet the criteria, there's a further potential suspension as well. And this 7 mine accounts for 4% of global supply.
Okay, yeah, I think the last time we were having this conversation was around, of course, late September was the one to watch because of the 2 mines out of CATL. I guess very simple question: what's your outlook for lithium prices, and all things equal, if things remain relatively shut as far as those mines are concerned?
If these mines don't shut down, we will expect lithium prices to be about 80,000 RMB next year. That's our base cases. But of course, if all these 7 mines got suspended, again, that take away about 4% of global supply, then we'll probably see lithium prices back to 100,000.
Anti-involution, we talked about it briefly when we started to see a little bit more disruptions, but how do you see this all playing out in your coverage? Yeah,
so anti-involution is still very slow. I think government are still taking it slowly, given the time for each industry to come out with its own plan. For example, cement and steel, they still allow you to time to do capacity exchange in cement. So we haven't seen major capacity cuts yet, while cement probably they need to cut next year. So by the end of this year, they need to finish the capacity exchange. While on the other hand, this lithium thing is basically just need things to do it more legally. And then also, I think government is talking about like the copper refining. So we recently also upgrade some of the copper refining names as well, given the refining margin TCRC has been on historical low in the past 20 years as well. So if we are doing some measures on helping this supply, that would probably help it back to the break-even points.
Yeah, I think we did see for the first time in some time the industrial profits numbers start to turn positive, right? Do you see momentum there? Was that a function of anti-involution for that month? And do you see what's the outlook for profits?
Yeah, so I think on the positive side, anti-involution basically helps a lot of the sector get exposed, right? For example, polysilicon, for example, steel, etc. But on the other hand, if things don't take it slowly, i.e. if we do it too aggressively, it might also hurt demand as well, right? If your raw material prices hike so fast, that will hurt some of the industrial demand. So I think that's one of the reasons that government wanted to do it slowly, gradually, give you some time, and then each industry to come out with its own detailed plan rather than cutting together on one angle. Yeah.
And you add that to tariffs, right? When we have the EU joining the likes of the U.S., at least they want to, in imposing steel tariffs of 50%. Does that put a cap on where steel prices are going to go?
I don't think that would be very important. Well, it matters because currently China has been exporting at around 110 million ton annualized number, which is more than 10% of our production. But the export to EU is a very small amount. We don't export to US much, and to EU is also very small as well. I think the China steel mills are looking at Southeast Asia and also looking at like Africa and South America as some new areas to export as well. And I think now one of the key reasons to export is not to make more profit. It's basically just keep domestic inventory low so that whenever demand is okay, they can actually hike prices domestically. So export is basically as a balancing factor, and they're looking for new destination.
All right, Matty, thank you so much.
Thank
Covered
you.
a lot. Matty Zhao there, co-head of China Equity Research and head of APAC Basic Materials, Oil and Gas Research at BofA Global Research. Well, we're going to dip into some live pictures out of Singapore here right now. The Milk and Asia Summit in Singapore is undergoing once again, where our colleague Haslinda is moderating a panel on the global investment outlook. Plenty more ahead. This is Bloomberg.
You've, in private credit, in the United States anyway, you've removed an intermediary, that is an investment bank. The investment bank is there to make fees and to distribute broadly syndicated loans to the market and not really do any diligence on distributing those broadly syndicated loans to the market, and then those get securitized.
Welcome back. You're watching The China Show. Now, Beijing has given a very stern warning to the new U.S. envoy here in Hong Kong not to interfere in China's internal affairs. That's after the Consul General reportedly invited prominent former opposition figures to her inaugural reception. Let's bring in Stephen Engel, a Chief North Asia correspondent. Steve, okay, we got to unpack this. What do we know?
Yeah, well, we do know that the new Consul General who took her post here in Hong Kong in August was summoned to the Ministry of Foreign Affairs Commissioner's office here in Hong Kong, that's Cui Jian-chun, and essentially was given a stern representation and explicitly laid out what the Ministry of Foreign Affairs calls the 4 nots. They said the 4 don'ts. Actually, I looked on the website there, but translated essentially 4 nots. And I'm not talking about rope knots. It's the do nots.
Do nots.
Yes.
Right?
Red lines.
Drop the K.
Yes, do nots. And that is essentially don't meet with former opposition leaders of the protest movement in Hong Kong. And there were a couple of people who were invited, and by all accounts, they did attend, and that includes Anson Chan. I wouldn't necessarily call her a pro-democracy leader from the protest, so I have to be very careful with how I describe her. She's a former chief secretary in Hong Kong under Chris Patton, but she was also has been an advocate, of course, for more democracy in Hong Kong.
Yes.
Right? That's a good way of putting it. Emily Lau surely is a proponent of democracy. She was the former chairwoman of the Hong Kong Democratic Party. Yeah. She was also there. She has told Bloomberg that maybe China overreacted a little bit on this case of summoning Julie Ede, who is the new Consul General. Emily Lau says Hong Kong is an international city and we should be free to interact with each other. If we have committed an offense, they can arrest us. That is in line with how Emily Lau has always carried herself in essentially standing up for what should be the rights of an international city like Hong Kong. So I'm not trying to blow this story out of proportion or anything like that, but it's an interesting indication of Beijing's unwillingness to have any flexibility on this subject.
Yeah.
When she's taking over the post, has an event, and then invites people that, of course, have been on a watch list, if you will.
At a time when we're seeing these U.S.-China trade talks continuing, and it seems like things are looking at maybe possible breakthroughs, right, from what we heard from Besant at CNBC, and it's almost like when they talk about soybeans, that's like the new rare earths for China here.
Yeah, that's right. I mean, soybeans has become a political issue at home, no doubt, because the Chinese have not bought any in this current harvest, and it's already a month long. And if you look at the harvest is a month long, 4 weeks in, and it probably will be another 4 weeks until Xi and Trump meet. So if Trump is right in that China is not buying any soybeans as a negotiating tool, well, if that's the case, then that's not going to be resolved for another 4 weeks, 8 weeks into the harvest. So it might be a wash on soybeans, and that's causing political trouble at home in the Midwest and other places where they grow soybeans. They are upset because anywhere between 30 to 60% of America's soybean crops traditionally are sold to China. So it's become a hot button issue in the United States, despite the fact that the Trump administration is talking about giving financial aid, from dipping into the tariff pot and paying those farmers. That being said, you're absolutely right. Besant is optimistic that there could be a big breakthrough in talks with He Lifeng, his counterpart, which are slated, we don't know the date, for a fifth round, probably around the time of the Xi-Trump meeting on the sidelines of APEC. But again, that kind of pushes the whole soybean issue
further down.
Yeah.
Further down. And is that really going to be some leverage for the Chinese? It is right now, but can you get a deal done before the Xi-Trump meeting?
All right, Steve, thank you. Steve Ingles, our chief North Asia correspondent. Of course, as we count down to more talks between U.S. and China, of course, APEC is certainly the next one to watch. Plenty more ahead. This is Bloomberg.
Right, so welcome back. Let's get back to a story we were talking about earlier here. This profit warning from a major U.S. chip industry name about restrictions and what that means, restrictions to China, what that means for the business in that market. Belle is here with us to talk us through this. Yeah, what do we know about this, Belle?
Well, I do want to apologise first to our viewers, but I did mistakenly have AMD on my brain earlier when I was talking about this, and I did, of course, really mean to reference Applied Materials, which is the key story here today. So Applied Materials, it is the largest maker of chip equipment in the US, and this is a company that actually gets a pretty hefty chunk of its revenue from China. Now, what's happened is that they've issued a filing to regulators in the US saying that they're going to be getting a pretty hefty revenue hit over the coming fiscal year, so fiscal year 2026. It ends in October of next year. But essentially, the company is really facing extended restrictions because this week we saw the U.S. Commerce Department Bureau of Industry and Security issuing a new rule that ramps up essentially the range of products that companies face restrictions on when going to places like China. And so that is going to have a really big bearing on Applied Materials. As a result, you can see there how it traded in after hours, but it did slump down as much as 6%. You can see its peers, Lam Research, KLA as well. I mean, they also felt the brunt of this. But actually, it's interesting because I've been taking a look at Applied Materials suppliers in Asia, and actually these are listed in Tokyo, but aren't really seeing the same sort of negative reaction. They're managing to trade a little bit higher. So it is that sort of broader chip story we were talking about earlier, but there's still a lot of optimism around the space in general.
All right, Belle, thank you. Annabelle Jewelers there clarifying that for us. In terms of what we're seeing and other stories that we're tracking for you, Bloomberg's been told that Boeing's 777X jet is now slated to fly commercially for the first time in early 2027 instead of next year. That sets the stage for potentially billions of dollars in accounting charges. And sources say customers, including Lufthansa and Emirates, are not expecting to fly the plane until 2027. The jet is already 6 years late and has major strategic and financial importance to Boeing. And Japan is reportedly days away from running out of the Asahi Super Dry, the country's most popular beer.
What?
Financial Times is reporting that retailers are racing for empty shelves as soon as this weekend. The shortage comes after a cyber attack hit Asahi's operations this week. The company said the disruption is limited to Japan, though. But yeah,
That's
about things going dry.
I was going to go in panic mode. It's only in Japan.
You're still okay for this weekend, Dave?
Yes, yeah. Well, I've stocked up. It's good news though for people suffering with gout. You really need to be.
You can take a break.
Yeah, keeping that uric acid under control. That's hard to imagine. Like that's a very strange story and reality to be faced with. Just
because of a cyber attack, yeah.
Because of a cyber attack,
which is not the first one either. Yeah.
What's good for you anyway? Just to moderate your alcohol intake, give or take.
It takes a cyber attack, I think. You got to reflect on yourself. But
if you are forced to.
But yes. Very interesting story.
Life choices there.
Yeah, we're watching travel, okay? So if you can't drink, you can travel potentially. Take a look at what we're seeing when it comes to
Don't go to Japan, though, if you're looking for
travel stocks. There you go, we're slipping. So there's initial Golden Week numbers, right? So according to the travel ministry for the first 2 days, Citi says was actually weaker than expected when you take a look at overall passenger throughout the volume there. So yes, might be not as good as what investors had expected there. So a bit of slippage. Happy Friday. Welcome back to the China Show. Here's a look at the HSI a half hour into the session. And yeah, we're losing a little bit of momentum here today. HS Tech, broadly speaking, is lower. So that's what we are seeing. Also, H shares are down about 0.8%. Looks to be still a pretty decent week, though, given all this AI optimism, momentum around the likes of Alibaba. That still continues to be a good story, though, today as well, Dave.
Yeah, I think when you have a look at how Baba's doing right now. It's moving against the grain last we checked. Yeah. I think you're getting an upgrade almost on a daily basis on the stock price itself. And also we're looking at... Oh, now do we have the other one? Can we look at... That doesn't look like Alibaba to me. Let's have a look at where we are with Samsung, please. There we go. So Samsung, of course, Korea is close today, but you do get that ETF that trades here in Hong Kong. That's really on the back of the chip story that Yvonne just talked about there. Baba's still on the way up.
Yeah.
Japanese chip makers on the back of the, OpenAI. That's the latest story. And shrugging off the applied materials warning that we just talked about in the last hour. So Japanese chip makers, Advantest, and what have you in the whole cohort coming up on your screens very shortly. I think we glanced at that already a bit earlier on. And, of course, the chip story in Taiwan also playing out in a very big way today.
Yeah, I mean, it's almost like it's the one thing to watch, right? When you don't have U.S. government data coming through, there's no jobs report in the second day of this government shutdown. So maybe you can brush those concerns aside right now and focus on this theme, right? Because there you go. Look at this, right?
Why not?
When you take a look at the whole supply chain right now in Taiwan is doing this, there certainly is a lot of optimism around this whole AI investment cycle. So that certainly is one to watch here today. When in the absence of news, this is the one that really is shining a little bit brighter here today. We're watching Bitcoin as well, right? Yeah. So we've talked about 120,000 for Bitcoin. There you go. We're staying above those levels here. We're coming off a little bit, but we are seeing some really punchy moves in some of these crypto stocks today. Let's talk about what's been going on with chips, right? Because globally, we've been seeing the market value really soar as investors rush to get exposure to AI. The rally is pushing tech stocks to all-time highs right now. Let's bring in our Asia equities reporter, Winnie Xu. She's with us now to talk a little bit more about the drivers behind this rally.
Yeah, it really is. This global AI rally just doesn't seem like it's going to stop anytime soon. And, right now it seems to be what we've been hearing is that investors' mood is really this fear of missing out. And we can see that just by seeing how investors are really brushing off these macro concerns, whether it's the U.S. government shutdown or, some of the weaker economic data that's coming through. But every of these small positive news is able to push stocks higher, and that happened yesterday with SK Hynix up some 10% and Kospi to its record high. And just today, right, then we have things going on in Japan with the deal between Hitachi and OpenAI, and also Fujitsu with NVIDIA, both pushing the stocks higher. So now we're waiting for Sam Altman to visit Taiwan, and we see expectations being baked in with the Taiwanese stocks as well.
Well, what I'm waiting for is someone to tell me what the risks are.
Yeah.
Yeah, so actually, when I had a chat with JPMorgan asset management the other day, Kerry Gregg, he was telling us how his biggest risk that he's seeing right now in markets is actually not these geopolitical risks or political uncertainty we're seeing, but actually the potential of disappointment that might come through the earnings when it comes to the U.S. mega techs, because there is so much expectations being baked in right now, and we are at valuations at a relatively stretched level. So if we cannot see these being translated into the actual revenues, then we might actually see a sell-off, which is what we actually saw them being the first to be sold off back in April. So that's kind of the risk that we're watching there.
Is AI the only thing people are chasing right now? What else is hot? Are they going elsewhere?
Yeah, so that's a very interesting one, because you would think that AI is this big hot topic that we're all chasing. But when you look at something that has been relatively boring for a while, but recently quite hot, is the gold miners.
Oh, yeah?
So yes, so gold is up over like 40% or something. And I was just looking at the MSCI gauge for gold miners. It's up more than 100%. So it's really outperforming these AI or tech themes. And we are hearing that investors are expecting more upside to come for these gold miners as well, just because how gold is continue to rise and continue to be favored by investors, given these geopolitical uncertainties and the hedges that they want against some of the riskier assets.
Yep, Winnie, thank you so much. Winnie Xu there on AI and gold, really two that have delivered quite a bit of alpha this week. Okay, so Winnie actually just brought up a very good point there on, I think Carrie Craig, who joined us earlier this week, talked about this, right? The risk to the AI rallies, you have to watch for the earnings because valuations look fairly stretched.
Yeah.
I think have been fairly stretched anyway. Well, this one is...
that was a firm zoom.
Yeah, there. Look at this. Yeah. So 32 on NVIDIA, Amazon, and we have a great story out in the terminal today that talks about how if it's Alibaba that you want, there's a valuation discount there. That's the sort of low-hanging fruit. And you can read about that story, of course, on your Bloomberg terminal today.
Yeah, I mean, there's still a lot of questions on how rich of a valuation can you give to Alibaba when, yes, there's a lot of hype, there's a lot of interest in this whole full-stack AI ecosystem, but we haven't really quite seen it generate revenues yet. So certainly the ROI is still kind of the question mark still as well. Let's bring in Sylvia Sheng, global multi-asset strategist at JPMorgan Asset Management. As we wrap up this trading week, it's interesting, right? It seems like investors are still leaning towards risk right now, despite that we're in this kind of vacuum when it comes to U.S. data. Is that the right sort of call?
So I think overall, if you look at the global backdrop, we still expect global growth to be pretty solid. We actually think next year we see global growth going back to trend, and also the policy environment pretty supportive, right? Easy monetary as well as fiscal policy. So we do agree with that pro-risk stance. In terms of data vacuum, I think probably short-lived. Obviously, depends on how long kind of the both parties will take to come back to the negotiation table. But we don't think the impact on markets or the economy would be too significant.
Yeah, I mean, so far it's been a non-event. I mean, if you didn't follow that news, you wouldn't know it's actually happening. Yeah. The fact that there's a shutdown ongoing. So you mentioned your overweight risk still, overweight equities. Is that almost purely AI? Like, what within equities right now should we be paying attention to?
So we actually overweight equities across a number of markets. So in the U.S., obviously, the overall valuation we talked about is a bit high, but we still believe in tech, and also we like financials as a quality cyclical exposure. And we also like Japan and Chinese equities globally as well. Yeah.
How do you look at this whole AI trade here right now, right? Because we're talking about valuations, and certainly they're not demanding in China compared to the U.S. per se, but a lot of these services have yet to go mainstream. We're not seeing that impact on earnings so far. So how should we be looking at this rally now in AI?
So I think actually if you look at the U.S. market, a very interesting point is if you look at the mega tech companies, their valuation compared to history actually is not that demanding, but the rest of the market is actually more expensive. So actually from a relative perspective, I think there's probably still more room for them to go. Clearly earnings will be important. Carrie already talked about that. We need that to come through. ROI really is a key driver here that we really need to see that.
You mentioned the easing out of the Fed, I assume is what you were alluding to earlier, is one of the assumptions we can make. How important is that for this risk rally? In other words, if we see markets somewhat price out cuts that are priced in, do you think that might cause some wobbles in this market, or is that going to be largely uneventful if we see that happen?
I think probably largely will depend on what's happening with financial conditions to some extent.
Okay.
If we are pricing out cuts, probably more likely to be in 26 because of stronger growth. I don't think the market would worry too much about that. But if the Fed is turning more hawkish, kind of not really based on fundamentals, then that will be more of a worry.
Can you tell us about more bonds, right? Because we continue to see treasuries are actually continue to rally in some ways, right? Can I still look pretty big on duration right now when it comes to this bond market?
So our thinking is that we will have a modest long in U.S. duration, but our focus is more in the belly of the curve, 5 to 7 years. We think there is room for the front end to come down further, but because our optimistic outlook for U.S. growth, we think the back end, probably the room for them to moderate further is pretty limited right now.
Could I ask you more about Japan? You mentioned Japan as one of the overweights in equities. There's an election this weekend, and people seem to be very bullish around the structural story in Japan. How do I need to be looking at risks, political risk within this market that's really done very, very well?
So I think for us, we definitely agree the structural setup is more positive, looking at corporate reforms. And also we think some of the structural labor shortage is actually pushing capex and also that wage growth as well. Okay. So that's really the underpinning of the positive story. Clearly, short-term worries about political uncertainty. I guess the risk will be whether this will linger on, whether this will trigger a lower house election. And also there's still uncertainty about the tariff impact on the Japanese economy. But I think it's really a trade-off between near-term concerns and more long-term structural story.
But still net bullish?
Yeah, net bullish.
Okay.
Yeah, I mean, is that going to be the next catalyst, though, this new PM? Because it seems like the contenders, or at least the ones that are the more front-running ones, are leaning more towards growth-focused policies.
So I think actually if we think about it's going to be LDP no matter what, right? We're talking about different candidates within LDP, and given they are running minority government both in the upper and lower house, they need to be a bit more expansionary than what they have been before because they need to cooperate with opposition parties. So that's really what we're kind of banking on, that expansionary fiscal policy.
I was having a conversation at the bank, I think about 2 or 3 weeks back, and I was asking, so clearly they didn't know where I worked. And I was asking the people they were advising me on to do something, and I'm like, what's the risk? And jokingly they responded, the risk is not investing. I can't seem to find anyone who can identify what the risk is to this bull market. Yeah. I mean, there could be none. The tail risks could be not as priced, probably.
But the conditions are there.
But the conditions are there.
But they can't name a trigger of what's going to lead to some sort of correction. Yeah.
Well, my question is how useful is it to start looking at hedges and defensive strategies amid this low vol environment, or is the opportunity cost to do so still quite high?
So I think clearly if we look at the volatility environment, taking out hedges now is more kind of cost efficient to some extent. Obviously market, if we look at overall valuation levels, pretty extended wherever you look. Obviously relative basis, China, Japan are cheaper. I think that there's still risks. If we think about risks, if inflation turning out to be hotter than expected, the Fed can't ease as much, right? And there is a labor market weakness going on, even though we don't think it's really kind of increasing recession risk. But what if it's more sustained than what we're pricing in right now? So I think still downside from that.
What if? That's a big one. Sylvia, thank you. Have a good one. Sylvia Sheng there, global multi-asset strategist at JPMorgan Asset Management. Right, just ahead here in the show, as we talked about Japan there, we'll get to you a preview of what's coming up, of course, in the weekend. Top contenders within, of course, as Sylvia was pointing out, the same party. It's still the LDP. We're now courting the opposition to help advance policy initiatives. The shaky grip on power is coming up in focus next. This is Bloomberg.
Well, Japan's ruling party votes for a new leader tomorrow, with the winner set to become the country's second prime minister in just over a year. Now, investors will be watching for any signals on fiscal and monetary policy. Let's get to our Japan politics and economics reporter, Sakura Murakami. She joins us now from Tokyo. Sakura, it's great to have you. So, yeah, we've been anticipating this for weeks now. How are things shaping up?
We don't have a clear winner quite yet. Obviously, we've been talking about Sanae Takaichi, a kind of right-winger politician, and political scion Koizumi potentially taking the lead. But we do also have a new dark horse, Yoshimasa Hayashi. He's the current chief cabinet secretary. He's coming up in the polls. He's also looking quite popular. In the end, there'll probably be a runoff between the top two contenders, and it's all looking quite fluid, murky. We're not entirely sure yet, but we will definitely have a new LDP leader by tomorrow, so that'll be something to look forward to.
You know, the calculus for markets goes beyond just simply, obviously, the first thing is who wins. The next thing is, could there be any new power sharing agreement that could be likely? What does that eventually look like as far as the coalition is concerned between different parties? Sakura, what does that look like currently?
So that will probably be one of the first things that the new leader will have to work on. There's been talk of passing a supplementary budget by the end of the year, and with a minority in both the lower and upper chambers for the ruling coalition, they will have to work with opposition parties. And all of the candidates have been open to some sort of cooperation, some sort of new power-sharing arrangement with the opposition, but they have been very coy and shy about specifying who really they want to work with. There have been rumors. You know, for example, Koizumi is known to be quite close to the Japan Innovation Party. Takaichi is considered kind of trying to maybe butter up the DPP, but we'll be seeing more of that in the coming weeks.
Yeah, we're just talking to our last guest about how the next leader could be a potential catalyst for Japanese markets in particular. What can we expect from the new leader in the coming weeks?
Yeah, well, with the various contenders, it's hard to know for sure. But I think one of the things to look out for is obviously the coalition, the new power-sharing arrangement that we may see. Also, further down the line, we'll probably be seeing a lot of diplomacy initially. There's ASEAN, there's APAC at the end of October. There's also Trump's potential visit to Japan, and that will be one of the first times that the new leader will probably meet with Trump. Obviously, before that, there's also the vote, and the vote tomorrow is for the leader of the LDP. But they still would have to go through a parliamentary vote in mid-October. In mid-October, to actually be voted in as Prime Minister and succeed the current Prime Minister Ishiba. So there's still a lot on the calendar, and there'll still be a lot of fluidity in the coming weeks.
Yeah, Sakura, that happened to me too. I had to check the calendar. It is, of course, already there. How quickly time flies. Thank you so much, Sakura Murakami there, our Japan politics and economics reporter, giving us a preview of this weekend and the likely scenarios over the coming weeks. Right, now, still on the story here, so hedge funds in Japan, or looking at Japan, or playing Japan here, are employing this a range of tactics to make money, certainly, from this too-close-to-call leadership field. Let's bring in our FX and rates, senior FX and rates reporter, Ruth Carson, joining us right now to talk us through. So, Ruth, talk about hedge funds, they can get creative, but what are some of the top strategies these funds are employing ahead of what's happening tomorrow?
Yeah, and this is the thing. It is such a close election. It's a knife's edge election. So sometimes with these things, you really have to take some risk off the table. And that's what we're seeing. The hedge funds that we've spoken with, some of them are really hedging their bets. Some have bought gold, for instance. They've closed their short yen positions. Others are going, you know what? I'm going to build up a buffer of cash so that when the election is clear, when the winning candidate becomes clear, and should shares rally on that, they will take it as an opportunity to short. So there is a range of strategies being employed, and it kind of attests to the situation about how much of a coin toss it is as to who the winning candidate will be.
Yeah, as you mentioned, gold might be the one thing. Tell us more about what these funds are doing to hedge their positions if they get things wrong.
Yeah.
Absolutely. And it's ironic in a way because the yen is often seen as a haven, yet it is at the epicenter here in many aspects because it is a Japan vote. So some hedge funds that we've spoken with have actually taken a longer term view. If the event risk is really, really hard to decide on, some like Atom Capital in Tokyo are actually taking the opportunity to go, you know what? I'm going to shut out the election noise. Instead, I am going to look at all the factors, macro, geopolitical risks, etc., as well as the Fed, that's going to be influencing the Bank of Japan's monetary policy path. Because in many aspects, that's the cleaner play. It could be a rates play, or in fact, a stocks play as well, whether it's opportunities to short or to buy. So some funds are going down that route.
All right, let's talk about how markets are positioned, because that likely determines, of course, what the reaction function is likely going to look like. Ruth, what does our reporting show in terms of how people are positioned around the currency?
Yeah, and this shows you how split markets are in many aspects. We all know that dollar yen's been in a range, 147 to 149 for the past 2 months even. So one way to look at it would be to look at CFTC data, and it's quite telling. On the one hand, you've got asset managers that are buying the yen. On the other, you've got hedge funds that are net short the yen, so they're bearish on the yen. And that spread between those that are buying and those that are selling is now at the widest point since 2007. So we're talking global financial crisis levels. So maybe Monday will change things, or next week when we get clarity. But yeah, it just shows you how fluid the situation entirely is.
Yeah, and it could go either way. All right, Ruth, thank you. Our senior FX and rates reporter, Ruth Carson, there. We got plenty more ahead. This is Bloomberg.
Welcome back. Indonesia's Vice Minister of Trade says Jakarta is seeking to improve relations with both the U.S. and China. Dyah, Roro, Esti, Widya, Putri told us that more about these trade negotiations, what's going on there with these conversations with Washington, as really her country seeks these exemptions for key exports like palm oil, like coffee, and also rubber.
Yeah, so I mean, it's always good to be optimistic, right? It's hard. I mean, everything that is happening is hard in itself, not only for Indonesia, for countries across the world. And so I think the outlook that we're trying to do and to have is to have that optimistic outlook, to see that, look, America, the U.S. has been a great trading partner for Indonesia. They are the second export country and also, if I'm not mistaken, the fourth import country for Indonesia. Their positioning for us is very important, and we want to continuously maintain those good relations.
Southeast Asian economies, especially emerging economies in Southeast Asia, are currently really concerned about China dumping cheap goods into the respective markets. Where is Indonesia on that?
Okay, so with the case of China, again, China is our largest trading partner. It's our first exporting country. It's our first importing country, right? So we're always engaging with China. We see this as being a great trading partner. In terms of the goods coming into Indonesia, as you say, we have a mechanism also in place. So in the Ministry of Trade, we have the anti-dumping committee, and China is open for discussion with respect to this. And again, this also entails the types of conversations and the cooperation that we want to continuously build with China. I was at the AEM, the ASEAN Economic Ministers meeting just a few days ago. Very hectic, but very productive. We also, on the sidelines, spoke to China, and we wanted to see how we can better kind of improve our bilateral relations and trade going forward. And again, about these concerns were also addressed.
So the numbers are not showing just yet, as in the impact on industries like textiles. Has there been, any implications on I guess, small and medium enterprises in the country?
So one of the things that we'd love to see is that industries in Indonesia continuously thriving, irrespective of everything that is happening. We have anti-dumping measures that are currently in place in Indonesia. So that is there, right, by the governments, and the government is there to kind of support the local businesses. But also industries have their own role, share of roles to contribute to the Indonesian economy.
Right, if that version catches you wanting, there's plenty more. The full version's coming up in the next hour of Bloomberg Television.
All right, close to 11:30 in Tokyo. Japanese markets are heading to that lunch break in just a moment, and we continue to see a pretty decent rally in Tokyo here today. Nikkei 225 up 1.5%. Topics as well. I think there has been some interesting calls from analysts there, bumping up their price targets for year-end as they count down to this LDP leadership race, saying that this could be the next catalyst, really, for Japanese stocks. If you take a look at, this shift, maybe potentially to pro-growth policies like cash handouts, tax cuts, for example, that certainly is why there is reason to still be long this market. 147.64 for dollar yen, Dave.
Yeah, I think JPMorgan, as Yvonne was pointing out, they're raising their topics target for the year end. That is Rie Nishihara, who I think is probably joining shows next week. Anyway, the target there is on the Nikkei is 47,000. It's bumped up from 42, and on the topic it's from 3 to 3.3. That's out of JPMorgan. Right, just very briefly, we'll look at Hong Kong benchmarks about an hour into the session. So that's what you get when a lot of the volumes in trading really comes across the stock connect. On a day when the stock connect is not connected, you have mainland shut, you do get volumes falling substantially. We are done on price. Hang Seng Tech 1.5%. It has been a very good week, of course, for tech itself. Very briefly, across the sectors we're tracking today, obviously it's still IT and chips, hardware. Some of the plays in Taiwan, for example, IT's up 1%. The benchmark is up again for a fifth straight day. So we are going into this weekend. And what U.S. shutdown? Do we need a job support? I mean, we probably do. It's probably better if we have it. But it doesn't seem to be disturbing markets right now with this AI trade managing to offset all ills in these markets. Okay, let's have a look at some headlines around the world this morning. India and China will resume direct flights. It's after more than 5 years that as the two of the biggest economies, world's biggest economies here, seeking to rebuild political ties. India's largest carrier, Indigo, says it will resume flights to China starting October 26th with daily service connecting the eastern city of Kolkata to Guangzhou. Air India is also expected to resume flying to mainland China. Okay, now China has warned the top U.S. envoy in Hong Kong not to interfere in the country's internal affairs. The warning comes after the Consul General reportedly invited former pro-democracy politicians to her inaugural reception. Now, the head of the Foreign Ministry, Hong Kong office, says that a U.S. diplomat should avoid meeting what it calls anti-China individuals.
All right, let's pivot slightly within geopolitics, Dave, and really talking about a battleground that's largely unseen, but increasingly critical. We're talking about undersea cables. And this is, as you can see with this globe here, and really it just looks like yarn around a ball, right? This vast yet vulnerable web carries almost all of the world's internet traffic. You're talking about some of the big tech companies in the U.S. like Meta, Google, the like, that take up almost more than 70% of the capacity there. Is the backbone of everything from AI to financial markets to military coordination. But we're starting to see diverging paths of these two major cable systems. You just show how connectivity and how aligned things used to be, really aligned with strategic national objectives. Now, you take a look at what's marked in orange, right? This is the China-backed peace cable. This is where you see others in blue by the U.S. And increasingly, you're starting to see these interconnected cables splinter. And that's really become a focal point of geopolitical tensions because you see the U.S. in some ways trying to shut out China from their networks. And China itself is also building its own so-called digital Silk Road. Now, last February, we certainly saw a bit of tension here, right? A Chinese-owned vessel was accused of intentionally severing lines off Taiwan's southwest coast. Now, Taiwan says it does actually suffer 7 or 8 of these breaks every year, Dave, with the majority linked to China. So, yeah, it's a very interesting piece. Feel free to check it out. The animations are amazing on this Bloomberg
Absolutely
project.
Fascinating story there. In fact, for more on this, let's bring in Belle, who's here with us to talk us through this. Certainly, we should be talking more about this, Belle. I mean, it started with this recent incident that Yvonne is pointing out, but how do we need to be looking at risks to this if we are that vulnerable to these disruptions here?
Yeah, I think that incident that Yvonne just mentioned there illustrates the story really well. So just to sort of recap some of the details, it happened in February this year off the coast of Taiwan, and there was a cargo ship, Hong Tai 58. It was actually registered to Tokyo, but it was crewed by Chinese nationals, including a Chinese captain. And so the Coast Guard in Taiwan spotted this cargo ship off the southern coast, and it certainly broadcast warnings about it, asking it to move, but still the vessel stayed for at least 2 days. And it was only after it departed that they did some investigations, and they discovered, the Taiwan Coast Guard, that essentially this cable had been disrupted. So the damage to it, I mean, it certainly severed communications between Taiwan and one of its offlying or outlying islands as well. From the Taiwan side, they said that this was an act of sabotage. They were very clear about this. And, of course, you can extrapolate a little bit further. I mean, if China were to take Taiwan in an act of force, a lot of military strategists and war gamers will talk about the need for China to essentially disrupt communications networks, and severing subsea cables would be a way to do that. From the China side, they said this was essentially an overreaction. This was a simple maritime incident, but it still did lead to an unprecedented jail term for that Chinese national, the captain of the ship. And again, it just puts the spotlight on why protecting subsea cables is such an important and formidable task.
Yeah, and tell us what's needed for that, right? Because it seems like it's not just to protect it, but, you know, from the U.S. and China's perspective, is to control some of these cables.
Yeah,
now.
I think that's sort of the way it's developing, and you referenced it there as well. There's sort of significance of this. I mean, you're talking about subsea cables. It's 97% of international internet traffic that's flowing through these subsea cables. It's very, very significant, and it's becoming even more significant as we ramp up communication through AI, for instance, and you have more of a need for these subsea cables. But you were talking about, yes, where they're most vulnerable. Of course, they're most vulnerable in shallow waters, for instance, landing points. But at the same time, they're also vulnerable in the way that you were referencing there about how they're becoming increasingly bifurcated. Yeah. So when it comes to manufacturers of subsea cables, there's four main ones, one from China, one from the US, a French company, and one from Japan as well. When it comes to how investments were thought about in decades or years past, it was a consortia that would usually be led by telcos that included US and Chinese names. But you were talking about those two different cables. You have the peace one from China, you have the US one as well. They're essentially kind of connecting similar points, but they're bypassing regional rivals. Yeah. They're stopping in places that are their allies as well. So yes, it's that increasing bifurcation. Whereas you said Washington is shutting China out of its networks, and China wants its own digital Silk Road as well.
Yeah, and I would imagine this becomes more a commercial issue when you talk about big tech, and they're getting more involved, because this is literally what runs the internet, and literally what keeps commerce and everything that we do, our lifestyles, online.
Yeah, exactly. And big tech is just continuing to have an even bigger presence in this. I mean, we talk about sort of the AI stack, and subsea cables are becoming a part of the overall AI stack, and a key part of AI infrastructure. But you mentioned earlier, and just to say it again, a decade ago, so 10 years ago, you had names like Meta, Microsoft, Google, Amazon. They were less than 10% of subsea capacity. Today, they're at more than 70%. So it's a huge increase, and it's leading big tech to actually start to create their own undersea cable network. So Meta, for instance, has a project going on right now that at the conclusion will make it the world's longest subsea cable network at more than 50,000 kilometres. They're financing that. And there's a concern that we hear from strategists and analysts, and ASPI is one of those from Australia, for instance, a think tank in Australia, but they say that you're really creating a situation now where you're very vulnerable, because you're going to have single points of failure essentially in the system. And yes, I mean, subsea cable attacks, they happen. There's around maybe 200 a year. Some of it maybe is just damage, but some of it also, even though it's hard to prove, is likely espionage, sabotage, disruption as well. So there are big concerns, and I think a retired military general from Britain put it to us really well in the piece. But he said, you know, in the Second World War, we talked about roads and bridges that were being bombed. In a coming conflict. You can't be surprised if cables become targets as well.
Enough undersea fiber that can go to the moon and back twice. That was what I read in that piece.
Yeah, fascinating
Amazing.
story.
Annabelle, thank you. Annabelle Drewler is our Asia Tech correspondent, bringing that story to us. Of course, if you're a subscriber and want to rewatch that interview or this hit that we've talked about this story, you can check out our TV function, TV Go. You can become part of the conversation, send us instant messages, and really watch how this whole intertwining of undersea cables and really what's at stake here. Fantastic piece. Check it out at TV Go. Some corporate news this morning. LG Energy will start sending South Korean workers back to the U.S. for essential business trips less than a month after hundreds were detained in a visa crackdown. Now, it follows confirmation from a U.S.-Korea working group on the validity of visas and travel permits. Almost 300 Koreans were detained last month at a Hyundai LG battery plant in Georgia, marking a low point in relations with the U.S. Bloomberg's been told that Boeing's 777X jet is now slated to fly commercially for the first time in early 2027 instead of next year. Now, that sets the stage for potentially billions of dollars in accounting charges. Sources say customers, including Lufthansa and Emirates, are now expecting to fly the plane until 2027. Now, the jet is already 6 years late and has major strategic and financial importance to Boeing. And Japan is reportedly days away from running out of, the Asahi Super Dry, the country's most popular beer. The FT is reporting that retailers are bracing for empty shelves as soon as this weekend. And the shortage comes after a cyber attack that hit Asahi's operations this week. Now, the company says the disruption is, though, limited to just Japan.
Yeah, there we go. Okay. I think I saw a graphic of doesn't Blackpink, I think, are endorsing Asahi, right? Or
seen them on buses.
Yes. Okay. There we go. I'm not imagining it.
Not just you.
Okay. Okay. So I'm like, where did I see? I already see that Asahi, apart from obviously in my fridge. Yeah, it's all around the transport network here. That's just to say, the pivot takes us back to the visa story. We talked about LG there. We talked about Korean visa. K is the segue here. We're taking a look at what's trending in China right now. You have state media defending this new visa program to attract global tech talent after online posts expressing worries about losing jobs to foreigners, and certainly comes as official youth unemployment jumps to a 2-year high, almost 19%. Min Lo, our China correspondent, is here with us to talk us through what concerns people have specifically about this new K visa.
Yes, as you said, one of the big issues is that youth unemployment is very, very high. We're talking about nearly 1 in 5 young people in urban areas unable to find jobs. And so they're up in arms about this new visa, which many people say is too loose, the requirements there, because it is meant to attract STEM graduates from renowned universities, and anyone who meets the criteria with a bachelor's degree can apply. And so on social media, and you can see this chart, it shows you the youth unemployment rate is at the highest level since 2023, when there was the gap there because the government was revamping the methodology for collecting the data. And on social media, people are saying that, there are already so many graduates in China, including master's graduate, because when people have no jobs, what do? They continue studying. So there is that education inflation going on. There are 12 million new graduates entering the job market now. So they're saying bachelor's degree is too low a requirement for this new K visa. And it's also not clear what exactly constitutes a renowned university as well. And then other people are saying that the English language advantage that foreigners have, that gives them a leg up over most local graduates in China as well. And still others are saying that it's an issue of foreign nationals getting special treatment here and being treated better than the Chinese nationals.
Okay. That certainly is the worries among the public. Tell us a little bit more about what the government has done. They've responded. They're just defending still this program. What are they saying?
Yes, well, the Chinese Foreign Ministry has said that they will be releasing more information about this new visa through foreign embassies and consulates. But the party newspaper, People's Daily, has published an editorial to try to defend themselves and really talking about the advantage of this policy. A part of it is juxtaposing against the U.S. policy here and saying that China still is opening its doors to foreign talents, right? But it's also also saying that, some people are misunderstanding this policy and spreading bizarre rumors that is causing unnecessary anxiety. And it says it's very narrow-minded to think that China doesn't need foreign talent, because any country that wants to succeed in the modern world must be able to attract top talent. And it says China is big enough with ample space to be able to absorb all sorts of talents, and also that there is this shortage of talents in key manufacturing sectors with a talent gap of about 30 million people. It didn't really address the crux of the issue, though, the youth unemployment issue. That wasn't really mentioned in the article, and I think people are still a little bit unsatisfied with that. And if you look online on the visa application page, it's interesting, you don't see that category available for application now, even though it's supposed to be available from October. So not clear, is that delay because of the October holidays, or is the government taking time to sort of fine-tune some of the details there?
Yeah, but still, as you say, maybe not quite soothing the public unease out there just yet. Min Lo, thank you for bringing that story for us. Our China correspondent, Min Lo, there. When it comes to this new program, K1 visas in China. Let's talk a little bit more about geopolitics and the like, and certainly that's one thing we're watching when it comes to the Philippines. And President Ferdinand Marcos Jr. and Vice President Sara Duterte are locked in a political showdown that could have implications for a regional power struggle between China and the U.S. Bloomberg Originals has been looking at how Manila's alliance with Washington is now coming under pressure.
This is the Vice President of the Philippines.
Nagbilin na ako, ma'am. Pag namatay ako, sabi ko, huwag ka tumigil hanggang hindi mo mapatay sila.
She's threatening to kill the president if she's killed. Even though Filipino politics is known for high drama, this was extraordinary.
Right now, the tensions have already evolved into an open feud.
The political battle between President Ferdinand Marcos Jr. and Vice President Sara Duterte is playing out like a thriller. But there's more at stake than meets the eye.
Filipinos understand the underdog situation that they're in terms of geopolitics.
The Philippines is on the front line of China's territorial claims in the South China Sea, and would play a major role in any U.S. effort to counter a possible Chinese invasion of Taiwan.
The Philippines is a key ally for the U.S. here in Asia. It is located in a very strategic spot.
But this alliance is under pressure as Sara Duterte backs closer ties with China, and her case is being helped by aggressive U.S. tariffs.
Well, President Trump says the U.S. has reached that trade deal with the Philippines.
Trump's presidency has upended just about every assumption you could have about America and the world.
The Philippines sits in the middle of the China-US power struggle. Which way it swings will have consequences far beyond its borders.
And subscribers can watch that documentary in full right now on the terminal or at Bloomberg.com. It'll be available later on the Bloomberg Originals YouTube channel. We got plenty more ahead. This is Bloomberg.
The president of bond giant PIMCO says credit markets are becoming more resilient as they take a larger and more structural role in asset allocation plans. But Christian Stracke told us that fundraising in the private credit space is still a little slow.
What the shift is really what's happening with banks. And it's less about banks exiting markets, but banks more looking for optimal allocation of their balance sheet. So rather than banks making every loan and keeping every loan sitting on their balance sheet, they're looking for partners who can take some of the loans that they're originating. So asset managers like PIMCO are coming in, working alongside banks. They are the ones who face the ultimate consumer, the ultimate household. But then PIMCO, in their private credit strategies, we can come in and we can take some of their loans into our strategies for our clients. So banks get a less balance sheet heavy option, and our clients get to access some of these high quality private credit claims. And that way it creates a much more resilient credit market where it's not completely dependent on the banks. You have more diversified sources of financing, a combination of bank asset managers operating in the credit markets.
When you look at
the APEC environment, you seem quite optimistic. Does that extend to perhaps working on an APEC-specific fund as well?
Well, we don't have anything specific right now to talk about, but certainly that's something that clients ask about, is whether whether that could make sense, whether there could be an APEC-specific fund in asset-based finance, in diversified private credit, something like that. We would expect that over time, that will become more and more common, as what we're seeing is a global trend of looking for regional alternatives in private credit, where people want to allocate by regional and have regional diversification rather than be so concentrated in the U.S., which speaks for the vast majority of private credit right now. People are really looking, just like in public fixed income, in public equities, people are looking for alternatives to the U.S., alternatives to the dollar. And so in time, we'll probably see the emergence of more dedicated private credit funds in Asia. There already are some, and there will be more to come.
Would you be able to put some numbers to the outlook for fundraising, maybe 3 to 5 years down the line from here?
Well, for right now, it's interesting. Fundraising in private credit is a little slow. And now, in direct lending private credit, so that corporate space in private, and that's because private equity is itself so slow. The deal making is not really happening, and so fundraising is difficult. The deals are not there, deploying capital. So that's all in the corporate direct lending space. Meanwhile, in asset-based finance, which is this diversified set of mortgages, consumer claims, equipment financing, et cetera, there the fundraising is actually very robust, and we're seeing a very significant growth. At PIMCO, we've talked about growing our alternatives revenues from 23% of our revenues to 30% over the next several years. And we're seeing that happen this year, continued growth in fundraising around our alternatives business.
How closely are you watching developments around the U.S. shutdown, the tariff backdrop? How is that affecting credit markets?
Very, very closely. And our base case, our pretty strong base case, is that this gets resolved in some amount of weeks, days or weeks, in a way that won't be too disruptive to the economy. It is disruptive to the markets at this moment of time. Of course, we're flying a little blind without data that we normally have, that kind of thing, but it's manageable for now. In the low probability event that this lasts for several weeks, that could be pretty disruptive to the economy, could be pretty disruptive to a number of federal workers and all of the economy that depends on that ecosystem. That could have a real impact, if that happens over time, on the credit market. So we're focused on it very closely. We expect that this should be resolved in less time than that, but it certainly is a downside risk that we're looking at.
Right, before we go, some big news out of Dongfeng Motor. So its EV brand has actually filed for, get this, an IPO here in Hong Kong. Shares up 5%. And looking at energy stocks on the back of this decline in oil prices, near 5-month lows, and there's an OPEC Plus meeting, of course, to look ahead to going into this weekend.
Yes, so we're looking at this. There is going to be some anticipation of what they're going to do when it comes to November and production levels and the like. So that certainly is a big one for OPEC Plus here right now, at a time when we are seeing oil prices still seeing some pressure. It's the Grand Prix in Singapore. Have fun, guys, over there in the Lion City as well, because we're here in Hong Kong. We're bracing for another tropical storm. And in Japan, maybe a potential political storm, right? Talk about, the leadership vote when it comes to the LDP party. That's happening tomorrow.
Yeah, so people are going to be busy while Yvonne and I take shelter from this likely T1. Sherry's going to be hard at work on that leadership vote. April and Haas are probably going to be at the Grand Prix.
Partying it up after Milken and Token 2049. What a week for Singapore.
Yeah, well, as we like our weekends, laying flats and not really doing a lot. So that's it from us here on the China Show. We will see you all on Monday, where we get to talk about all the fun things, Fed minutes, China credit, and everything in between. Thank you for joining us this week. Happy Friday.